Hey there and welcome back to Cosmic Crypto. In this video, we're going to be learning charting basics. I'm going to be going over 3 tools that I use on a regular basis to help me invest better, find better entry points, and get out before the price drops. We're going to be talking about support and resistance, trend lines, and Fibonacci's. Let's go. In order to follow along with this video, you're going to need to find the software that I'm using for charting, and that's called TradingView. If you open up a web browser, you can go to tradingview.com and it'll take you to this page right here. Now you're going to need to sign up for an account, so you can go and click on the little person over here on the top right. You can go to sign in, and from here you can either sign up for an account or sign in if you already have one. If you don't have an account already, I've got a link down below for TradingView, and if you use my link, it's an affiliate link, so we'll each get $30. From here, you can go to their products, and you can go to the chart right here, which will open up the charting software that I'll be showing you here soon. Or if you want to sign up for a professional account, you can go to their pricing, and you can see what their prices are here. And you can do the annual, which is what I use because you get a discount, or you can do it monthly just to test it out and see if it's working for you. Now, if you pay for the professional version, you will get better features. Like over here, you can do only if you pay for this. Pro version, you can get 5 indicators per chart. I think the free version is only 3, maybe 2, I can't remember. You can open 2 charts in one window, so you can look at charts side by side. It's ad free and a bunch of other things going on over here. And then the more up you go, the Pro Plus, the Premium, you get better features as well, like 10 indicators, 4 charts, 25 indicators, 8 charts, and so on and so on. But for the purpose of this video, you can just use the free version, and that should be sufficient enough. And that's the software I use. Let's move on to the tools. Support and resistance is one of the first things that you usually learn when you're charting. And it's very easy to kind of start on the higher time frames, move down to the lower time frames, and kind of see where prices react to certain areas on the chart. First thing you want to do for support and resistance is go up to your toolbar on the left hand side here, and I like to find the horizontal line. You can either hit Alt H or just come over here to the left side toolbar and grab the horizontal line. Once you grab that horizontal line, I'm going to start off on the weekly time frame, and you can change to the weekly time frame up here on the top. You can do the drop down here, come down and find 1 week, and we can start off on the weekly time frame. Now, with the horizontal line, what we're looking for is where price has come to a stall. And that can be either stalling to the upside or to the downside. And so I like to start from the bottom and move my way to the top, or you can do vice versa, top to the bottom. But as we can see, that price came to a stall with these 2 candles right over here. And I'm going to put a line right at the bodies, or you can put it at the wicks. I like to do the bodies myself because that means that there's more action going on in that area on the lower time frames. And I'm just going to keep moving up. So I'm going to grab another horizontal line, and I'm going to look for where price has had some significant action and stopped in certain areas. So the next spot I'm going to put is right here. And as you can see, we had support right here with the candles. Over here we had previous support in that area. Over here we had previous support in that area, and that looks like about it for that one. Let's grab another horizontal line. Let's just put them randomly out there. We don't have to go all the way from the top to the bottom. I'm just going to start throwing them out here just so you can get the idea of how support and resistance works. And so this one right here, we had almost touching that line right there, but we did have resistance right here. We come all the way across over here, and as you can see, there was some kind of a support right there. And we had this wick almost come down and touch right there. Grab another horizontal line, and I can see a big resistance right there. And so if you come across from left to right, you can see we had resistance, some support, resistance. This one broke through, had some resistance right here, almost came down for support right there. I'm going to grab another horizontal line, and I'm going to put it in the main area. So you don't have to do every single support and resistance you see. We're just looking for the bigger swings on the chart. And so obviously the very bottom would be a swing. The very top would be a swing. And then you see a bunch of these different swings along here. You can put them in that area as well. And we'll just grab a bunch of these and put them on the chart like so. And usually when you put these on the chart with on the weekly time frame, when you have the bigger swings happening, you can always usually find some, action in those areas. So if we zoom in a little bit, we can see that right here we had multiple weekly support right here. Finally, we had a nice wick come off of there, and that's when we started to move to the upside. This one came down and almost touched the support, almost got there, not quite. But a lot of times people will put their buy orders and sell orders not exactly at the support lines, but maybe right above it. So that way, because otherwise a lot of people will put it right at the support line, and you don't want to get the people with the bigger money are trying to get all they can get without everybody else getting in as well. And so sometimes you'll see it to where the price doesn't quite reach the support or resistance, but it gets awfully close in certain areas. We also had support right here on this line. We had a lot of price action in this area, multiple weeks of price action. When we finally broke through, we fell down on this line right here. I'm actually going to move this one a little bit right there. So we had some resistance. It broke through, came back down, tested it, didn't quite get there. And as you can see, there's a lot of different areas on the chart where you can have, and right here. So we had this support over here. Now it's acting as resistance right here. There's a lot of different areas on the chart that you can find support and resistance. And when you move down to the lower time frames, or even on the higher time frames, like for instance, if we had this line here from all the way back in June 21st of 2021, so we had multiple support back here on this time frame, and this line was still here, that would have told us that when we move forward in time, that there's a good chance that we get some kind of reaction at that support line, which we found right here. And if you would have had a buy order right around this support line right here, and you got in on this wick, even just to the body candle up here, you would have gotten a 24% move. Now, if you would have followed it all the way up this way, you could have got a higher move. But then also, when we come back, and just recently, within the last couple of weeks, you can see that this old support line that was back here is now acting as resistance in the last couple of weeks. And so my assumption here is that, and not just my assumption, but how support and resistance works, is if we finally break through this resistance, which was previous support, the next line that we're going to see some price action, which we already did with this wick right here, is around the just over 7 cents. Because that's where we also had previous resistance right here. And we had it somewhat as support right around here, but there's lots of price action in this area. Now, the lines itself are not always 100% accurate. They're pretty close, but not always 100% accurate. So you could see a lot of people using support and resistance lines as like some kind of a, box. And let me change that color here so we can kind of, it's not so bright. And so a lot of times people put a box as their support and resistance because it's not always pinpoint accurate. And so there's usually some kind of a range where you find a lot of action happening. And so another range that I'd be looking at would have been this range down here. And so we find a lot of action happening in this area right here. As you can see, if you're putting buy or sell orders within this box, you could have gotten multiple times that your buy orders would have been hit here. Multiple times your buy orders would have been hit here. And then a sell order, as it broke through this box, you would have known that that support is no longer being support anymore, and it came back up, and this long wick right here tested it as resistance, and then we fell even further. And now that we're coming up, we know that in this area right here, there's a good chance that there's some kind of resistance along with this area right here. And so if you had a sell order right in this area, you would have got out at the opportune time because we had this giant wick come back down and push us back into this resistance level right here. And so if you look at any chart, this is the Raven coin chart, and I'm looking on the weekly time frame, you'll be able to find support and resistance areas to find a better opportunity to invest in whatever coin or stock or whatever you're looking at. And so when you come back down, and if we have this line right here, now when we came back down, a good time to buy, well, maybe not that one. This would have been a good time because it broke right through. But right down here, a good time to buy would have been in this area right here, where if we draw a box all the way across and we cover a wide area, So we're going to go down, and I'm going to put it right there because we've got wicks right here. We've got bodies in here. We've got lots of wicks and bodies in here. Lots of action happening in this area. So if you were looking to get your best entries on Ravencoin in this particular chart, as we were falling down, right in this box right here. Now that is a pretty big swing, but if you're buying just to buy and hold and get a good investment, that's a 21% swing. But if you're buying to invest and hopefully sell at a higher price, this would have been a nice area because we did have previous support on the higher time frame, previous resistance on that time frame, and notice when we finally broke out of this, we had that massive move to the upside. So now that we're coming back down, we would expect that this box again holds as support. Then we can move down to the lower time frames, and let me get rid of these boxes because I want to use the lines as our support and resistance right now. On the lower time frames, then we can kind of adjust. So as you can see on the lower time frames, these are our weekly support and resistance that I put on here. But we had a nice price action bouncing in between the support and resistance right here. We had some price action in between here. It held for support for quite some time up here and resistance up here. Resistance here. In this channel, we had a bunch of action going on in here. And we can just see these in between these two price levels right here. So we had resistance, support, resistance, resistance, support. And when it finally broke through, we went further and found our next line of support and resistance channel. Moving over to here. And then we can also add more support and resistance on the daily. So once you get down in lower time frames, you can start putting some support and resistance in areas that you find that there could be a reaction. Now, it's not going to always be 100%, but usually there, and I actually think that's pretty good. It's not always going to be 100%, but usually you can see some good reaction in these areas. So as you can see, we had support right here. We finally broke through, retested it, went up, but where did we find support again? Right at this same area right here. And so support and resistance levels are very basic, but also very important in order to get better entries into your long positions, your short positions, or just spot trading. Trend lines, just like support and resistance lines, can help us find good entry and exit points when getting in and out of the market. In order to get started on the trend lines, on our chart, we're going to go up to the top left toolbar. We're going to open up this section right here. And you can use a couple of different things. You can either use your trend line tool right here, or you can use a ray tool right here. I'll show you with the trend line tool right now. So you're going to grab your trend line tool, and basically what we're doing is trying to find a trend of where the market finds some kind of a reaction. So to start out, I'm on the weekly time frame on the Ravencoin chart. And if I go down to the bottom left here, I can see a starting point for this trend at the bottom of that wick. Then I'm going to pull this trend line all the way across and see if it has any kind of reaction to the price at different areas. And as you can see, as I pull this trend line across the chart, I'm going to let go right there. And we've had one touch right here. It's come back down and touched again right here. And now just recently we've come down and touched again. And the bodies of the candles are closing above this trend line. So if you knew that you had this trend line going and the market was coming and the price was falling, you would have known that right here would have been a decent spot to be looking for entries. Another way you can use a trend line besides just support is you can use it as resistance. So I'm going to grab another trend line and I'm going to use it from the top of this wick up here, and I'm going to run it down to the bottom. And as you can see from right here, we've tapped this trend line once, twice, 3, 4, 5, 6, 7 times. All the way down this trend line, you would have known that there could have been some kind of resistance at this section, this section, this section right here. Now in order for a trend line to be accurate, I think the rule of thumb is it needs to have touch points at least 3 locations. So this bottom trend line came in and gave you the final third touch point right here. We started off with 1, 2, and now we've got 3, and it's continued on to 4, 5, and 6. Let's move on to find another trend line here. Right here I see a trend line coming down, so I'm going to start from this wick right here, and I'm going to move it up like that. And as the price is going up, you can see that we're getting rejected multiple times off this trend line. And just on the bottom side as well, I'm going to grab another trend line. And we can kind of see that we've got multiple touch points right here. One on the bottom here, 2, 3, 4. Let's zoom in a little bit to the daily chart and see if we can find some other trend lines. And as you can see, when you get closer into the daily chart, these lines that I placed on here actually have pretty good touch points on there. And you can kind of get a closer view of what's actually going on in the chart. Now, a good thing about trend lines is you can use trend lines to find breakout moves. And here's one trend line that resulted in a breakout. So I'm going to grab from the top here, and I'm going to pull down to the bottom. And as you can see, we've been hitting this trend line multiple times until finally we got stopped out by this trend line right here. We started to consolidate in between these two lines, and we finally had a breakout. And as you can see, once we finally break above one of these trend lines, it's usually a decent move. It doesn't always have to be a decent move, but there are multiple instances where it is a decent move. For instance, we can go back a little bit further, and we can see that we had a bit of a trend line going from all the way back here, and we've been hitting the top of this trend line. Let me get a little this to the center here. We've been hitting the top of this trend line multiple times. Hit it again, and then finally after we broke out, we had a very large candle come in. Now it does have a large wick, but we also can use the trend line to spot these resistance levels, and then after the breakout, having the price come back to retest that trend line as support, as it did right here, was a good sign. And as it held that support on that trend line, we got another nice move to the upside. One of the trend lines that I was using in my charting for the Raven coin price was finding a pattern move, which was, let me get rid of some of these trend lines here. From the top here down to the bottom. And so we had one touch here, and this specific pattern is called a bump and run pattern. And I'll be doing another video on patterns later. But right now we had a couple hits on this trend line. We finally came up and we broke above the trend line. We came down and retested it multiple times, found it as support, and then we continued our move to the upside. So as you can see, you can go all the way down to lower time frames. We can go down to the 4 hour, and we can find multiple different trend lines. We'll just put a couple here on the chart that I can quickly see. So we had multiple touch points to the upside, and then we finally broke out and had a decent move. You can even go lower, down to the 1 hour time frame, and as you can see, we had multiple points to the downside, and then we finally broke out to the downside, and that's when the price started to move downwards. So that's trend lines in a nutshell. You can just get onto a chart, go to whatever time frame you're looking for, and you can find different locations that would be good entry points and good exit points. The Fibonacci tool is probably my favorite tool to use to find entry and exit points. On Wikipedia, Fibonacci is defined as a retracement method of technical analysis for determining support and resistance levels. It's named after the Fibonacci sequence of numbers, whose ratios provide price levels to which markets tend to retrace a portion of its move before the trend continues. Now, Fibonacci there's a whole lot to it, and I'm just going to go over the very, very basics of Fibonacci, and I'm going to explain it in really as little detail as I can, just to make it as easy for you as possible. So to start out using the Fibonacci, you're going to want to go to your toolbar on the left-hand side, and below the trend line here, you'll find the Fibonacci Retracement tool, or you can hit Alt-F. You're going to click on that tool, and if I just click on the screen anywhere, let go, and then kind of move it around, and then click again, you'll see some lines show up. Now, in the settings, you can either double click on the lines, or you can go up here and click on the settings button. You'll see that there are a lot of different options you can use to change it. I am going to save this setting as just my template because I want to go back to it. But the first thing you're going to see is when you open up the Fibonacci tool is something like this. So you can go ahead and change the colors of these. You can remove the background and play around with this all you want to make it more convenient for you. And so I'm going to open it back up, and I'm going to go back to my template just so I can have it the way that I like it. Now, using the Fibonacci tool is fairly easy, and I'm going to use Ravencoin on the 4-hour chart in order to show you how this could have been very beneficial to you during this last run, from when we went from 2 cents, just over 2 cents, all the way up to 7 cents. So to get started, I'm going to grab a new Fibonacci, and in order to find, Fibonacci actually is great for finding entry points after you missed the initial run. So actually I'm going to go back and show you. Here's the very bottom of this move. So these were all higher priced than this bottom right here. And if you were watching the price and then the price shot up like this and you missed the entry point, your best entry point would have obviously been right here. But you don't know where the price is going to go. The price could shoot up and then just continue on down. So in order to get a better entry point, you would pull out the Fibonacci tool. So what you would want to do is you pull out your Fibonacci tool and you go to the very lowest price that you can find. You click and then you find a high. And this, in my opinion, would be considered a high because then it had a slight retracement down. Now the best entry point after this one, and you missed this pump, would have obviously been right around here, around 0317. That would have been your best entry point. And in order to help you find that entry point, you would then take your Fibonacci and move it to the very top of this price action right here, and click to let go. And as you can see, the Fibonacci tool worked out perfectly. The price from the bottom went up, and it retraced back down 50%. The 5 here would be equal to 50% of the move that it made. So from here to here is 50%, and then from here to here is another 50% to make it 100% of the move. So it had retraced, and as you can see, you broke through the 382 right here. So you would have considered that it's possibly going to go down to the next line. The body of the candle broke through, I should say. And then you can see that you had hit the 0.5 and created a wick. And that would have told you that it's finding some support at the 0.5 Fibonacci. You had broken through on the next candle, but the wick got pushed back, or the body got pushed back above, and so therefore you still held the 0.5. And in this instance, you could have taken a risky move and probably entered right here on this candle. And that actually would have been your best entry point after missing the initial move. Now, if you wanted to be a little bit more conservative, you would wait until the price went back above the 382, since you had already broken below it. If you break back above it, that's a very bullish move, and you could have entered right here. That would have been the more conservative entry, and it still would have worked out great for you because, as you can see, there's still quite a move, and it barely went below your price till it went on to another larger move. Now, again, let's delete this Fibonacci, and since now this is a new low, we can continue to scroll over with our price, grab the Fibonacci tool, and once this low was created and you had created a higher high, which is all the way up here, and it started to come back down, now you want to know where a new entry price would be. So you'd find your lower low, or your previous low, which is right here. Then you'd go up to the higher high, which is right here. And now you can see that the Fibonacci has retraced. It had broken through the 618 with this candle right here. But the very next candle broke back above, and it continued to hold this 618 level on the Fibonacci until finally the price broke out and you had a great move to the upside. Now, if you would have noticed that not only did the Fibonacci hold around this 618, and you started to see these higher wicks come in, saying that the buyers were coming in and pushing this price above the 618, you could have entered anywhere in here and it would have been a fantastic entry point, and you could have made from the 618 to the top of this move roughly 76% on your move. But let's say you missed this move too. So we'll go ahead and delete the Fibonacci, and we're going to zoom out just a little bit. And what we would do next is you'd go to the lowest low, which is right here. You'd click and go to the new high. And as you can see now, we are holding around the 382. Now, what you need to realize with the Fibonacci when you're trying to find entry points is the bullish sentiment. If the price is still holding above the 382, so it's only retraced 38.2%, that is very bullish on the move still. That means there's a good chance that you're going to move to the upside. If you're holding a 50% move, there's still a good chance that you're going to continue moving to the upside. Even if you come down and you hold the 61.8% move, it came down 61.8% of the initial move, that is still bullish, and there's a good chance that you're going to have another move to the upside. When you want to start getting worried is if the price came back down and started to hit around the 786 or below. That means that you've now retraced 78.6% of the move, and the chances of going to the upside are getting a lot slimmer because the bulls are losing control of the market. You got to think of this as a tug and war. If the bulls are pushing the price up and holding this 382 level, that means that the bulls have got a lot of power and the bears are not able to push it down lower. Now, if the bears are able to push this price back down 78.6%, that means that the bears are starting to gain control, and we'll see what happens when that happens here in just a moment. So now we're going to grab a new Fibonacci level and we'll go to the next one. We've got a lower low here, or we got the next low here, and we've got a high here, and we continue to hold the 0.5, which is good. Now the 0.5 is lower than the 382, which we saw here, so the bears are starting to get a little bit stronger in pushing the price down. They even were able to bring it all the way back down to the 618. But on this next Fibonacci is where we're going to see when the bears are starting to take control. So we're going to go to this low right here, move it to this high, and as you can see, the bears were able to push the price all the way down 78.6% of the move. The bulls tried to push it up, but then as you can see, it broke back down below the 618, and that's when you need to start getting worried. Since the bears were starting to gain control of this move and push it down far enough, then they started to get stronger, and eventually they pushed it down below the 786, and that's where they took control. And now you can see the price has been moving down ever since. Another way that you can use the Fibonacci in this instance is to find out when the next top is going to be. So for instance, if we had started getting into the price action around this area right here, you can grab your Fibonacci, and instead of going from the bottom to the top, you can go from the top to the bottom. And I'm going to open up the settings of this Fibonacci because we can add different Fibonacci lines here. So I will add the 1618, and as you can see, the price went past that. Then I'm going to add the 2618, and as you can see now, this is where the price started to see some resistance. And once you notice that the wicks are getting pushed down, it tried again, and the wick touched the 2618, but then got pushed down again. That's when the price is starting to lose momentum, especially right here with this larger wick. Now, I don't recommend shorting the market when we're in a bull market, when we're in a bullish move like this, because it continued to hold nicely, and there was not a good chance to get a nice short in here because it didn't go down very far. You would want to start shorting the move once you broke through that 786 line is where you'd look at shorting. So, but this can actually give you some hints of where you're going to see some kind of resistance. As you can see, the 2618 held right, or found some resistance there. But let's move up to the next one and see what happens. So we go from the top to the bottom, and now you can see that the 1618 is starting to see some resistance around there. The price wasn't able to get to the 2618 this time around. So what's that telling me? What that's telling me is that we're losing momentum. So we were able to hit the 2618 on this move right here, which is bullish, but the next move we got pushed down, and we didn't come anywhere close to the 2618. We got rejected at the 1618, which is telling me that the bulls are losing steam. And then obviously the next thing that would tell me that the price is about to reverse is the fact that on the Fibonacci, on this move right here, is where we broke down from the 786 level. So not only did we lose momentum to the upside, but the momentum to the downside started to get stronger. Now I'm going to open this up again because I want to get rid of these. And I'm going to show you one other way that you can use the Fibonacci going the other direction. So we're going to zoom back to the price when Ravencoin started to fall. And the other way that you can use this instead of going from the bottom to the top is go from the top to the bottom. And as you can see, Ravencoin had fallen over here, and then it started to move back up, but it got rejected at the 786, and you couldn't, and the bulls could no longer get the price above the 786, and that ended up creating a lower high. Now, once you started to see that lower high is where you needed to get concerned, because the 786 was not being able to get broken through, so now it's falling, and the 618's having a hard time too. And so what we can do next is now we can take it from this high, Fibonacci, to the next low, which is right here. And now you can see again that we're getting wicks, and we're not able to get above the 786, and we're falling below. And so we'll do one more, and we'll grab our Fibonacci tool from this high to this low, and we were hitting the 786 on these ones, but now the bulls are losing momentum, or they're losing strength, because now we can't even reach the 786 on this next move, and that's when you start to see the market fall. So that's just a very basic, simple way to use the Fibonacci in order to figure out whether or not the prices are going to continue to the upside or the downside, and where to find better entry points when you're trying to get into a move that's already happened. I hope this video was helpful for you, and if you'd like to see some more charting basics videos, please leave a comment down below. If you're not already subscribed to the channel, what are you waiting for? And if you could, please tap that like button. And if you're not following me on Twitter yet, the link is down below in the description. Thanks again. Talk to you later.